It's been a tough few weeks for precious metals, with silver dropping over 10% in the last 3 weeks. But are we going to see a silver lining? Hello and welcome back to our channel. My name is Daniela Hathorn. And in today's video, we are going to be looking at silver. As we know, precious metals are one of the most requested assets on our platform. So, of course, we'll look at the fundamentals for precious metals, specifically for silver, and also jump on the charts to see what we can expect in the next few days. But before we get into it, please like this video, comment, subscribe, and turn on your notifications. So as I was saying, it's been a tricky situation for precious metals for the last 3 weeks or so. We have seen a rapid depreciation in their price, with silver actually taking a lot of the weight on this. And most of this having to do actually with the fact that yields have been elevated, they have been rising, and that has been weighing on precious metals, which are non-yielding assets. Of course, we've had CPI data in the last week, CPI and PPI for the US. Now, remember, and we'll see on the charts when we go in just a second, in mid-July, we saw a rapid rise in silver, but also gold prices. And that was on the back of that CPI data for June in the US showing a bigger than anticipated drop in consumer prices. The data for July, not as pleasing for risk on sentiment. We have seen headline inflation ticking up slightly. And that, of course, has weighed on the risk on sentiment that we've seen recently. It's also propelled US yields higher because essentially allows more room for the Federal Reserve to continue hiking or to continue keeping their monetary policy tight. So the fact that we've seen these higher yields alongside a drop in inflation, because even though we do have inflation ticking up slightly in July, it's still dropping nicely. So this drop in inflation and the rise in yields actually gave an effect to a rise in real yields, which is, of course, picking up the cost of holding precious metals like silver and gold. So all of that has been weighing on these precious metals recently. As I said, we have seen an uptick in inflation, but the trend continues to be positive in terms of the drop. Nonetheless, as I said, this allows the Federal Reserve to continue to apply their monetary policy of tightening. And of course, that will mean that the US dollar and US yields will take advantage of that. So essentially, that is the fundamental reasoning that we've seen. Not really much has changed in the last few weeks. I think we've been talking about the same scenario and play of events for a while now, but it seemed 3 or 4 weeks ago, it seemed like it was heading in the right direction. CPI was dropping more than expected. Yields were being weighed on, and of course, that was allowing silver to really appreciate in price. That is now flipped. We now have inflation dropping still, but having risen in the last month. So despite the trend still being positive, the fact that the July data came in higher than anticipated and actually rise marginally on the month, it actually shows that the disinflation process isn't linear. It isn't a straight and perfect line. It does have flows along the way. And I think as you near towards the latter part of the disinflation process, especially as you get close to that 2% target, I think it's a lot more regular, and I think it's much harder to get to that tail end disinflation period compared to when you had inflation at 8%. So essentially, that is what we've seen. And of course, I said that has been weighing on gold and silver, mostly on the fact that the rise in yields actually led to a rise in real yields, which has weighed on non-yielding assets. We also have something else playing out, and that is the latest data from China as well. China has actually started to evidence real signs of struggle in the economy. We've had production data, which has shown some weakness, industrial production and also retail sales. And of course, that is alluding to the weakness in the Chinese economy. And that has been playing into a little bit of safe haven demand in the US dollar. Now, some may say, well, gold and silver are also viewed as safe haven, and that is correct. But I think that has more to do, one, with US-centric data, but also given the rise in yields, I think when traders are anticipating a safe haven demand, they're probably flocking to the dollar more than precious metals at the moment, given this depreciation brought on by the real yield effect. So I think that is also playing into the momentum recently. Fundamentally, China is showing some real signs of weakness. But also, if we look elsewhere, we've had some data out from the UK this morning. The UK is going to be in focus heavily this week with a lot of data coming out. But the jobs data, actually seeing real wages rise again rapidly. And of course, that puts further pressure on the UK economy. The UK economy still in that deep cost of living crisis, inflation still well above the target there. The Bank of England struggling to keep that under control. And that just keeps on fueling this recessionary and inflationary scenario, leading to the possibility of stagflation, which is a real concern for economy. And of course, that also alluding to a little bit in the rise in yields, but also seeing a little bit of safe haven demand potentially in the dollar, especially if you're looking at some of those pairs that include the pound and the dollar. So essentially, that is fundamentally what we have going on. Let's jump onto the chart now to see how silver has been trading. So this is the daily chart of silver. As you can see here, that rapid depreciation there, leading to an over 10% drop in the last 3 weeks. We're now hovering just above that $22 mark. I think that is going to be a key psychological level. And to be honest, I think last time we talked about silver, it was here in mid-July after that CPI surprise, which saw that risk on sentiment brought on. I think I'm pretty surprised at how strong the depreciation in silver has been. I think given the way it's been trading, we have seen a lot of volatility in the market. It's been quite overcrowded at times. But of course, that strong sell-off, mostly on the back of that rapid rise in yields. We also had that Bank of Japan meeting, which also led to a quick appreciation in US yields, which also brought on this process. But I think, for one, I'm a little bit surprised as to how it's been trading. The fact it's broken below all of the moving averages so easily and still continued lower, I think really alludes to the strength in this bearish move that we've seen. As I said, nearing a key area of support. I think there is a good amount of support below. I think it's just if the market is going to be able to recover enough momentum to reverse some of these losses. I think a key metric, which is this blue line here, has been the 5-day exponential moving average, has been a key metric of short-term momentum. And as you can see, we have been, or silver has been trading below it now for the last 2 weeks or so, really struggling to push above it, which has been determining some of that momentum. So far today, again, pulling back roughly around 0.8% right now as the morning goes along. As I said, good amount of support down below. It's just a case of, are we going to see that momentum build enough? I think there's also many obstacles up ahead. I think even if we do see buyers coming in, I think there's a lot of resistance. I said very crowded, and it's hard to tell at this point where the market is going to go. If we're looking at the daily chart here, it does look like the downtrend is losing some momentum. As you can see, we have started to test this exponential moving average a few times now as the days have been going on. We are starting to see a little bit of buying support coming in, and also the RSI now clearly hovering just above that oversold line, suggesting that this momentum could be flattening out. So far, we've seen a little bit of sideways consolidation, especially in mid last week here, as you can see, potentially looking a little bit of indecision. And if we zoom in a little bit more and we look, for example, at an hourly chart and we zoom in here, then we can actually see the fact that we have seen some indecision in the market and traders struggling to find that momentum as they come in. So let's expand this a little bit here. And we can also look at the RSI on this chart. And you can see how for the last few days, we have seen a little bit of sideways consolidation. The RSI really trending along the midline here, suggesting that the sellers are now struggling to see further downside, but also buyers are struggling to come in and find enough support to reverse the price higher. So as I said, it's pretty hard to tell where it's going right now. I think caution is definitely advised. I think there is a lot of volatility. We have a lot of data coming out this week, as I said, mostly UK centric, but nonetheless, it could play into the momentum. Also, we have speakers from central banks, and markets just want to know what's going to happen with monetary policy. And of course, yields are playing a big part into it. The US dollar, safe haven demand. So it is a very overcrowded market right now. I think if you're looking for a key area to tell whether the bearish momentum is going to continue, I think the $22 mark is going to be key. I think if you look at the lows back here from the end of June, just around that 22.11 mark, I think we start to see sellers really pushing beyond this level. I think the pullback could intensify potentially all the way back to $20 per ounce here, similar to what we saw back here in March with that reversal here after those highs. So I think, as I said, pretty overcrowded markets. Sellers do still look like they are in command in the short term, but seeing a little bit of that bearish momentum starting to really trail off here, finding a little bit of support from buyers, attempting to push higher. I think if we do break above the 5-day exponential moving average, I think we've got a chance that buyers may come in. Also, the 200-day simple moving average at 23.23. I think if buyers also manage to reverse momentum all the way back up to here, then we could potentially start to see more sellers coming in convinced that the reversal has taken place and therefore pushing back towards that $25 mark. But for now, as I said, a lot of caution. It looks pretty overcrowded. A little bit hard to tell right now where this direction is going. That is it for today's video on silver. Thank you so much for watching, and don't forget to subscribe to our channel.